So let's start with the big daddy of them all, AngloGold Ashanti. Remember, it's a diverse portfolio of mining operations, not as significantly exposed to South Africa as it was before. About 25% of its production is here. The rest is in other parts of Africa, Latin America, and Australia. Those, I think, are the big divisions, and we'll look in a minute at where those operations are. 80.8 billion rands worth of market capitalization. It's gone up a lot recently. We'll have a look and see how that number is arrived at. Profitability has been sort of on-off, so we're not showing an active PE for the whole year. It has paid dividends at various points in the last 18 months, though, so it shows up as having a historic yield of around 0.25, but to be perfectly honest, that's very tricky to pin down as well. But it is trading profitably. It's cash flow positive now. Let's bring up the share chart while you're talking, Gary, but this has been a revival. Look at that. Shooting higher up to about 200 Rand a share, which is not fabulous if you think that it was at 380 or something in 2012, but it's a big improvement on where it was in 2015.
Yeah, definitely taking advantage of that gold price, but also Venkat, I think, doing the right thing. So on that dividend,
CEO Venkat Krishnan,
currently not paying a dividend, and they've said until they get their debt under control, they're not going to. Now, what they have been doing, I mean, they've been criticised for being, having way too much gearing on the balance sheet. They've brought that down by about 30%. If you remember, towards the end of last year, they sold off their Cripple Creek and Victor mines.
Yep. Cripple Creek, I don't know what they did there, but it probably sounds like a good asset to get shot on.
Probably. I don't know what the safety record was there, but maybe it had a reputation.
So that was in America, and then they've got things like Cerro Vanguardia in Argentina, something in Brazil, the Tropicana asset in Australia. So we think about it being like the Vaal mines down there, and we think, oh, well, those are deep and tough and so on. But actually, this is really a truly international operation. And your point is they were selling things that were not high margin, and what they got left is all the best production assets in the world.
Perhaps, yes, they were selling non-core assets, but if you look at something like Obuasi, which they were going to do a partnership with Randgold, I mean, there's huge problems there at the moment. I mean, they've got illegal miners coming on. There's
in Ghana.
In Ghana, they've had the government withdraw military support. They're operating still in difficult environments.
Yeah.
The issue for me with AngloGold is that if you look at someone like Sibanye, who's using the dip in the cycle to go and acquire assets, AngloGold, because of the increase in production in the good times, has had to be unloading, and they're almost a distressed seller, which makes me a little bit more nervous of them. But again, you've had a share price re-rating, so to get in at these levels,
because the plan last year sometime was to do a little bit of a group reorganization and maybe take the South African assets out or something. Then they decided not to do that because they got a bit of headwind from some of the shareholders. But now they've gone to their plan B. They've delivered lots of free cash flow from these operations. The gold price is higher, so the balance sheet looks better. So if you were going to be optimistic about the gold price, this would be the one to own for me anyway, because it's got the highest margin of safety.
It definitely is the biggest. I mean, they're doing 4.4 million ounces at the moment. So it's a behemoth. It's absolutely massive, and I think that does add a level of safety to an investment.
Plus, it's got a New York listing, so it's got big support base there.
Yeah, so they've got ready access to capital if they do need to raise. But if you look at their all-in sustaining cost as well, I mean, they've brought that down to about $910 an ounce. So with the gold price sitting at 1,250 about at the moment, I mean, that's a big margin of safety that you're buying.
But what happens if we've had a very stressed start to the year, and in that kind of environment, a few odd people buying gold moves it up, things start to get a little bit of momentum of their own. This time last year, it was a big mistake if you forgot to sell your gold stocks in March. So what about this year? I mean, the key thing here is we've seen these big upticks. What are the speculators out there that watch our show supposed to do? Are they supposed to bank profits in the gold stocks now, or are they going to stick in for more?
Yeah, again, if you look at, I would say, for me, it's going to be not hot on AngloGold. I think, looking at it, you do get a seasonal uptick, especially in resources the last couple of years in the first quarter. That should be coming to an end. Whether it quite possibly could continue. I mean, just the fact that our market was off, almost 20% earlier in 2016, doesn't mean that it's not going to recover, doesn't mean we're going 40% down. Over the long term, I think, with a 20% discount to the market share, there's probably other sectors that are looking more beaten up that will give you more opportunity over 5 years. Gold for me is a speculator's market. I mean, you go in, you don't even need to take a large amount of gearing. You take these sorts of 50, 100% movements and you get out. If you were in gold now, I would probably be banking profit.
Okay, so it's a different story to the negativity of last year, but it looks like a not hot, sadly.